ratings agency Moody's has downgraded its rating on the Africa Export-Import Bank owing to weaker than expected asset performance. It also further warned that the embattled African lenders' access to funding sources is shrinking. Moody's, of course, lowered the rating from Baa1 to Baa2, but it changed its outlook from negative to stable. Now, this move marks the second downgrade for Afreximbank in about 4 weeks. Now, notably, a lower credit rating can raise borrowing costs for the lender and, in turn, impact its lending rates. The one-notch downgrade comes as the African lender battles to protect its loans from restructuring in the countries of Ghana, Zambia and Malawi, claiming that as a multilateral lender, it has preferred credit status. Now, of course, this latest downgrade follows Fitch's decision to also downgrade the bank last month. And let's discuss the implications of this with Shay Ebenezar. He is the CEO of fintech company Payaza. He joins us now in Lagos. Great to have you on the show with us, sir. And let's just start off with the fact that we've seen the African Union and also Afreximbank arguing against this ratings from these agencies. They say these ratings decisions are based on a flawed categorization of their loans. Do you agree with that argument, that, of course, Afreximbank is not governed by those typical commercial risk principles?
Thank you so much, Uche, for having me. I think I've been affirmative in support with Afreximbank regarding this particular statement of fact. Personally, I've looked at the report and then coincidentally, you could see that Africa has the fastest growing economy in the world. And there's a recent report from, I think it was World Bank that was published in terms of the default rates of different continents. And then I think Africa came the second, which we currently, which the Middle East is at 0.3. Africa doing about 1.9. You have country, Latin America at almost about 10.9 default rate. So I think for a Titan bank like Afrexim, having it one grade down notch is not the true state of of what it is. And it's one of the things that we need to start looking at as Africa. We need to tell the story in a different way. More data, more research has to be put into all of this. And I think the research methodology being applied on African businesses or African banks had to be changed. So those are the nuances we need to talk about here.
All right. And of course, the African Union is talking about creating an African credit rating agency. Now, it's interesting you said that because we also noted that while the Fitch downgrade did send Afreximbank's bonds on a slide, they've since recovered. So how do you think this credit ratings shape investor sentiment, access to capital as well, and also trust in Africa financial institutions?
Currently, it's the initial stage is going to affect, and which is one of the things that we do at Piazza. While you're running a local business, you must have an international mindset, which is one of the reasons why we looked at the process of getting ourselves rated. We're rated as well by GCR, Moody's, Data Pro, and recently we should have an Augusto. But tentatively, it's going to affect, but at the long run, the market is going to bounce back. The trust in Afrexim is very, very huge, and then we're going to get a whole lot of system approved, the new rating, and then I think Afrexim is going to work on all of those concerns and issues raised. And then knowing fully well there is an impact-driven bank, not necessarily trying out profitability. So at the long run, for impact-driven organizations, it's going to still give Afrexim some sustainable fund to play with within the African space. Yeah.
All right. Well, let's get into some of those issues that these ratings agencies are raising. For example, as you mentioned, your company, Payaza, you recently secured a strong credit rating from Moody's. For a company like you, what does this downgrade signal in terms of the sovereign risk and also institutional exposure that African DFIs currently face?
So for sovereign risk, I think it's on about 3 scale. For sovereign risks, we talk about three major factors, which are about the currency volatility. We looked at debt service challenges and then political instability. So these are some of the things that was considered in the case of, I think, rating downgrading in Afreximbank. But in our own case, I think the encouragement should be that most African businesses should have the global mindset, talking about how we're going to factor in the sustainability, the currency volatility across all of those regions into the model of operation and then the structures that we run across different businesses.
Now, I want to raise one other thing that Moody's has pointed to. It also said that this downgrade reflected a less extensive range of funding sources. What are your thoughts on that? What does this reveal about capital raising and also private sector resilience in quite a tough market here in Africa?
Thank you. So I think regarding the capital raise, capital formation in Africa is kind of weak, but I think the conversation should then change to how African businesses need to support more of African business. There are a lot of capital that we can use to fund a lot of businesses here. So which speaks to the exchange and then different market how to just come together and then fund African businesses at the sustainable rates, not looking at the prejudice rating that has been issued. And we then put our businesses in a sustainable and then more transparent way. I think most businesses will get funding if it's very transparent and then built on the pedestal of trust.